Good morning, guys. Welcome to this Friday, October 24th. Thanks. Thank God it's Friday. It's been a pretty crazy week, market-wise, back and forth, wild swings. And I'm surprisingly looking at the overnight holding on to their gains. So they ran this whole thing right up or they had this big sell-off midweek, big kind of risk-off day, and then just the last 2 days has been just recovering the whole thing. So. It's pretty interesting, right? So we had the little run up here early on this week. Uh, they ran it hard right back down here to the starting point, 66.90, and then they just drifted right back up again to the spot where they are, almost back making new highs. So we'll see if this was just a temporary thing or not. Now we're getting news this morning though, so we're getting CPI coming out this morning, which could potentially change a lot of things. It's the only piece of news we got. I'm not sure about the other reports coming out or not. It's been one of these things where, you know, let's see, the other reports are not getting published. So, but they're going to publish the CPI. That's going to be a print needed for the Fed next week, or I think it's next week the Fed meets again. And then we'll see how this CPI number fares. There could be a little bit of craziness going on here as that number comes out. So, but oil has been mostly to the downside. That's going to be a big depress. And the last few days of oil prices is not going to impact that CPI number. But the last month or so of lower oil prices could certainly give it a nice lower print. If the print is not lower, if it's on the upper side, that probably could get the market a little bit scared. But we'll see how that shakes out. At this point, though, that's the only piece of news we have coming out in about 20 minutes. And thereafter, we are left to our own vices, I guess. So, and we can still say same overall macro picture, or in middle of earnings. We're getting earnings reports, and so far the market is just kind of shrugging it off. It looks like a pretty good earnings season so far. The company is guiding lower, getting hammered, but it's overall nice earnings growth, and the market overall is holding on to their gains, not freaking out by any means. So we're going to start off from the long side, looking to buy a weakness at this point. Maybe close towards the highs. We didn't get that last pop. I didn't see any profit-taking sell-off late yesterday. That was kind of what I was looking for, but that never materialized. So, and the overnight has just been grinding higher. So I would start from the long side, looking to buy weakness against the 67.85s, 67.75s, rotations up. Last one to buy against the 67.60s, taking off my long bias below the 75s and going back range bound. Now we are up against these upper edges, right? So we are up against these the all-time highs, and you know how that's going to go. It's always going to be a potential grind up here. Seldom do you get just a clean run straight through it. It could be the case today, though. I mean, today could be the case given the CPI number. So you have a reason for it today, but normally you get stuck here grinding for a while before they can make that move. And it's always much less dramatic than you think. So starting off on the long side, looking to buy weakness against the 67.85 and 75 for rotations up. Below 75, I'm taking off the long bias, going back range bound. Below 60s, we're back heading lower again. But still looking to buy against that 67.60s. And on the way up, looking for potential shorts against the 67 or 6800s and the 6815s. Both of them could potentially yield decent short setups. I think the better one is probably early on here at the 6800s, around about here. And if that comes out, I would be a little bit more cautious about the short, but still looking for it. But at that point, you kind of had to look for a potential edge to form. And we have a little bit of data to lean against. But as you get into price discovery, you don't have much to lean against. So you just had to be a little bit cautious about it. So that's what we got, all right? So starting off on the long side, let's see if they can hold on to this one, or if we're going to see a little bit of a pullback here as the day session kicks in. And it's going to be the CPI could be a catalyst up, could be a catalyst to the downside. It just depends on how it comes out. Looking at the NASDAQ and the bonds, So bond market backing off a little bit. I readjusted my splits. Let me see, where's my, there it is. All right, so I adjusted my little split here, my B split, folded all that stuff together, and now you see I have a little distribution. It'll move out of the middle, small distribution for me a little bit higher at the 18, 15, 16s, and we are kind of right back there right now. So they backed off the highs. And I would just start off with flat at range band on the bonds, looking to sell strength against the 1825, the 119s, looking to buy weakness, 1814s, and the 186 to 8s for rotations back up. So yes, flat out range bound trading on the bonds. Let's see how far, if they're going to get the directional move here after that CPI number. Nasdaq is Nasdaq is in price discovery, I believe. They have taken out the highs. Let me see, Nasdaq's F1. Yeah, I think Nasdaq is in price discovery to the upside. So they after that sell-off we got, they ran it all the way down here to the 24,800s and then bounced, and then they're right back up again. So they were down, remember, they were down all the way down here to the 800s. A big flush to the downside. Then look at that, straight back up again. Getting bought with a vengeance. This is institutional buying, driving it like this. Now, if they can't hold this triple test here at the highs, yeah, that could be a pretty good profit taking scenario. So I'm not going to say that we are going to make new highs, or we are for sure going to take this higher, but this buying was pretty intense. Now, if they can hold on to it and trade higher, yeah, could be a nice pile-on effect to the upside. So I'm going to start from the long side, same as we always do, looking to buy weakness against the 25 330s, 25 280 to 290s. Below the 275 or below the 280s, I'm going to take off the long bias, going back range, but I'm still looking to buy against that 25 200s. So those are the three levels I'm looking to buy against. They go below 200, I'm thinking a retracement, a potential heading lower again. So at that point, we are definitely, so the long bias, taking that off after the 280s, still looking for that last potential leg to the downside to 200s as a buying opportunity, but below 200s, yeah, bets are off at that point. We're heading lower. So that's and of course on the upside, potentially short setup against the 390s here, 400s. That could be a nice move to the downside as well if that holds. If they take it out, yeah, stay on the long side and see how far they can grind it. That's the name of the game. So starting off on the long side on both the ES and Nasdaq, let's see how far they can take it. Watch the CPI print. If that could set it off to the upside, could set it off to the downside. So that could be either way. It just depends how the market reacts to it. Then oil and gold. So gold, starting with gold, right back down again. Remember, we were trading up here. We were trading right at that area here, that four little edge. And I was talking about, yeah, it's either going to hold here and they can potentially take it higher, or if it comes out, we're going to be right down below that 4100 again and potentially head lower. And they didn't disappoint. Look at the open, they just traded back up again. So you got some early strength, and if you got short against that, you would have been in good shape. I would not necessarily look for that long trade or for short trade against that strength. I was just going to watch that I was just watching it to see if they're going to start take this higher. But after they start taking out this 4120 ledge from yesterday, then kind of bets were off, and then you know that they're going to start taking this lower. So that's an overnight trade started before the London Open. And you definitely had a shot at getting short there for a move to the downside, and did not disappoint. Question is just if you could have stayed in it. That's since it's so volatile, but they're well below that area now. They're well below the 4100s. So starting off on the short side, looking to sell strength, looking to get short or looking for short opportunities against the 4085s, 95s up to that 4110 London high. They take out that London high, I'm going to be taking off the short bias and above that 4122 that ledge from yesterday, then we start leaning in on the long side. So these two levels are going to be critical if you're going to head lower or if they're going to start retracing to the upside. But I would not be surprised if they're going to knock down gold a little bit further, because there's a lot of froth in gold and a lot of potential trading opportunities, as you can tell with these big positions coming out and going in and out. Oil is still trading higher. Or the Russia sanctions thing. You can tell when the market thinks it's going to be something which has teeth, you get the repricing on the market, and that's what's happening now. So sanctions, they're forecasting some glad higher prices heading up towards the 63, 64 attractor right now. So I don't think this is going to be long-lived per se, as they replace supply elsewhere. They're going to be starting to come down again. But short term, we're probably going to see market prices come up to 63, 64 again. Now again, this is too early for or too late to impact the CPI print. So I would look to buy against this big weakness 62, 6160s, 6120s for rotations up. We got a pretty good ledge here at the 6120 that comes out. Look for a retracement trade to the downside. So that's oil. Not going to be very aggressive on oil to the on the short side. Right now they are being repriced based on sanctions information. So we had to kind of wait for that to reprice itself. All right, so that's oil. Trade oil from the long side, gold from the short side. Back to the ES, and that's pretty much where we are. We're pretty much where we left it. So let's see how this whole thing shakes out. We got another like 12 minutes, and we get the CPI print. So I'm gonna grab some coffee and get ready and see how this print comes out. All right, guys. So I'm gonna wrap it there. Good trading, and I will see you back at 11:30 for the next update. Okay, see you later.